Daniel wasn't born with a silver spoon. He was just a regular guy, working a regular 9-to-5 job. The paycheck was steady, but it was never going to be enough. He watched his colleagues live for the weekend, spending every dollar they earned. But Daniel saw something different. He saw a trap. He realized that trading his time for a fixed salary was a losing game. He wanted more, not just more money, but more freedom. He knew that to escape the rat race, he had to change the rules of the game he was playing. This desire wasn't just a fleeting thought, it became an obsession that fueled every decision he made from that point forward. So he started with the one thing he could control, his spending. He became incredibly frugal. He cut out the daily $5 coffees. He started meal prepping every Sunday, saving hundreds on lunches. He said no to expensive nights out with friends. Instead of upgrading his phone, he kept his old one. It wasn't about being cheap, it was about being strategic. Every single dollar he saved was a soldier he could send out to work for him. He saw his savings account not as a safety net, but as an investment fund in its earliest stage. This extreme frugality was his first and most important business decision. While his bank account grew, so did his knowledge. Daniel devoured everything he could find about money. He spent his evenings and weekends reading books on investing, personal finance, and wealth creation. He watched countless hours of videos about the stock market, real estate, and business. He wasn't just passively consuming information, he was actively studying. He took notes, he made spreadsheets, he learned about ETFs, index funds, compound interest, and risk management. He understood that financial education was the best investment he could make, and the returns would be limitless. He was building a mental framework for wealth before he even invested a single dollar. This period of intense learning was crucial. It taught him patience and discipline. He learned that getting rich quick was a myth, but getting rich systematically was a science. He wasn't looking for a lottery ticket, he was building a machine. He saw that successful investors didn't follow the hype, they followed a plan. They didn't panic when the market dipped, they saw it as a buying opportunity. This mindset shift was more valuable than any stock tip. It prepared him for the volatility of the journey ahead, transforming him from a simple saver into a calculated strategic investor ready to make his first move. With a solid cash cushion and a wealth of knowledge, Daniel made his first investments. He didn't try to time the market or pick some obscure penny stock. He started simple. He put a significant portion into a low-cost S&P 500 ETF. This was his foundation, his slow and steady base. Then, he allocated a smaller percentage to individual tech stocks he had researched extensively. He believed in the long-term vision of these companies, not the short-term noise. He set up automatic monthly contributions, putting his investing on autopilot. This disciplined, unemotional approach was key. He was building his wealth brick by brick, but passive investing wasn't fast enough for his 2-year goal. He needed to drastically increase his income. So he turned to side hustles. Daniel had some basic coding skills, so he started taking on freelance web development gigs in the evenings. The pay wasn't glamorous at first, but it was extra cash. He then discovered another hustle: tech flipping. He would scour online marketplaces for underpriced laptops and phones, clean them up, and resell them for a profit. Each successful flip, each completed gig, was more capital he could pour back into his investment portfolio. He was creating his own cash flow engine. His discipline was relentless. When the market had a bad week, his friends would panic. They would talk about selling everything. But Daniel did nothing. He stuck to his plan. He had done the research and trusted his strategy. He knew that volatility was part of the game. He ignored the hype around risky meme stocks and crypto coins that promised overnight riches. He focused on his system: earn more, save more, invest consistently. This unwavering focus protected him from making emotional mistakes that derail so many aspiring investors. He kept his head down and just kept executing. As his side hustle income grew, it began to snowball. What started as a few hundred extra dollars a month turned into 1,000, then 2,000. He funneled almost all of it directly into his investment accounts. The small profits from his tech flips were now buying more shares of his ETFs. The income from his coding gigs was accelerating his portfolio's growth. He was creating a powerful feedback loop. The more he earned, the more he could invest. The more he invested, the more his money worked for him. This synergy between active side income and passive investment growth was the secret sauce. Entering his second year, Daniel knew he had to level up. His foundation was strong, but reaching his millionaire goal required bigger, more calculated risks. He had been networking with people in the tech industry through his freelance work. An opportunity arose to invest in a promising early-stage startup. It was a huge risk. Most startups fail. But Daniel didn't just throw money at it. He spent a month doing intense due diligence. He analyzed their business model, met the founders, and believed in their vision. He invested a significant, but not catastrophic, amount of his capital. It was a calculated bet on high growth. Simultaneously, he ventured into real estate. He didn't have enough for a down payment on a rental property, so he started with wholesaling. This strategy involved finding distressed properties, putting them under contract, and then assigning that contract to another investor for a fee. It required hustle, not capital. He spent his weekends driving through neighborhoods looking for neglected homes. He sent out letters, made cold calls, and built a network of cash buyers. His first few deals were small, but they proved the concept and generated chunks of cash that dwarfed his side hustle income. He was now playing in a different league. The discipline he had honed over the past year was now more important than ever. With larger sums of money on the line, the temptation to get greedy or fearful was immense. He treated his real estate wholesaling like a business, not a hobby. He created systems for finding leads and managing contacts. He reinvested every single dollar of profit from his real estate deals back into his portfolio. There were no fancy cars or expensive vacations. He maintained his frugal lifestyle, knowing he was on the final stretch. His focus was singular: get to the finish line. Then, the big plays started to pay off. The startup he invested in was acquired by a larger tech company, and his initial investment multiplied several times over. The crypto market, which he had cautiously entered, began a bull run, and his small position grew substantially. His real estate wholesaling business became more efficient, and he was closing deals consistently, generating tens of thousands in profit each month. It felt like everything was firing on all cylinders at once. But it wasn't luck. It was the convergence of 2 years of relentless effort, smart risk-taking, and unwavering patience. Daniel's income streams were now generating more than he could manage alone. The constant grind of flipping tech and coding was no longer the best use of his time. He needed to systemize. He hired his first virtual assistant to handle the administrative tasks for his real estate business, managing emails, organizing leads, and scheduling calls. This freed him up to focus on high-level activities like negotiating deals and building relationships with bigger investors. He was transitioning from being a worker in his business to being the owner of his systems. This was the critical step toward true passive income and scalability. He began to build teams. For his real estate business, he partnered with reliable contractors and real estate agents. He started a small fund with a few other investors he trusted, allowing them to pool their capital to take down larger property deals that he couldn't finance alone. This leverage amplified his results significantly. He was no longer just Daniel, the side hustler. He was becoming Daniel, the investor and capital allocator. He was building a financial machine that could run and grow without his direct minute-by-minute involvement. The machine was getting bigger than him, which was exactly the point. The day he crossed the $1 million net worth mark wasn't marked by a wild celebration. It was a quiet moment of reflection. He looked at his portfolio dashboard, a mix of stocks, real estate equity, and cash. It was a number he had once only dreamed of. 2 years, 24 months of intense, obsessive focus. He had sacrificed sleep, social events, and simple comforts. He had faced skepticism from friends and family, but he had proved to himself that it was possible. The feeling wasn't just pride, it was a profound sense of peace and control over his own destiny. The next Monday, Daniel walked into his office and handed in his resignation. He wasn't leaving his job because he hated it. He was leaving because he had built something better. He had achieved financial independence. His journey wasn't a story of luck, a lottery win, or an inheritance. It was the direct result of obsession, calculated risk, unwavering patience, and an incredible amount of hard work. He had flipped the script, not in a single lucky move, but over 2 years of relentless, intelligent effort. He was free, and his story stood as a powerful testament that with the right plan and iron discipline, anyone can